Hello, and welcome to your webinar. My name is David Risen. Bill Mead and I own OMECorp. We're also known as Oklahoma Mailing Equipment, where we meet all of your mailing and shipping needs. Andy, can you believe Oklahoma Mailing Equipment started in 1975?
Wow, that's 40 years ago. That's like double my age.
Either you're really bad at math, or somebody's been lying to you.
Yeah, I didn't really believe it either when I said it. So let's just move on.
And as you know, we also have Genesis of Oklahoma to meet all of your copying and document management, storage, and imaging needs. And we are proud to sponsor today's webinar to answer a question that all businesses have probably asked themselves one time or another, and that's, how do I get paid quicker? We're calling it Roadmap to Electronic Distribution. If you've missed our most recent webinar topics, they include Smart Shipping for Business, Address Quality Health Check, and Quick Fixes for your postage machines. We'll be replaying those in the future, but if you'd like to see them sooner, put a request in your Q&A area and we'll get you a copy. Andy will be your host again, but I'll be answering all of your questions throughout the webinar. When you have a question, just type your question in the dialog box and I'll answer it as soon as I see it. So Andy, you're up.
Thanks, David. As usual, I'm your host, Andy. Today we're going to have one very important goal: to show you how to get your invoices paid quicker.
And send them for less cost.
The best way is to call and threaten your customers.
No, it isn't.
Wait, I got it. We email them nonstop until they pay.
Nope.
Hand deliver invoices and stand there awkwardly waiting?
Wrong again, Andy. Come on. We do this by appealing to our customers' preferences and needs.
That's right. Today we are talking about multi-channel communication with a delivery preference manager. That will be split into these topics: why choose, MCC defined, how it works, and real-world examples. As David mentioned, he will be answering questions throughout the webinar. Let's see how fast David can type. I want you to type as many questions in the question area as quickly as you can think of them.
Okay, then we'll be holding auditions for a new host at the end of today's webinar.
If he misses a question, or if you think of one later, feel free to email those questions to your web manager at glc@omecorp.com. You'll also see our regularly showcased lightbulb moment that highlights best practices for your business. To respect your time, I'm only going to take about 20 minutes today, which means we're going at a super quick pace. So if everyone's ready,
I'm ready.
Let's go. Now, we already know that there are many types of communications in any company. From small businesses to major enterprises, most of us have many communications in common, ranging from press releases, explaining regulation changes or new products, all the way to statements and invoices. Actually, today's topic applies to any company document, especially those typically printed. And it doesn't matter if the recipient is within your company, at another business, or your customer.
That's right. EOBs, EOPs, NSFs, statements, notices, regulation updates, any and all business critical document. Imagine a visual representation that your marketing pieces are not only delivered, but seen, or that your annual reports went to every intended recipient.
Slow down, David. I know it's exciting, but today we are going to focus on the invoice. Now, most of us have paid at least one bill or invoice online. It's really fast and convenient. It's usually just a click or two away. However, we still get some paper bills. Why aren't all companies delivering every communication electronically?
Because many companies are not ready to trust the most important documents to electronic communication yet. Or they think that once they move to electronic delivery, it's all or nothing. Meaning they'll have some customer holdouts on going paperless, so they're just not ready to give up on paper communication. Companies are thinking, why spend the money to build the infrastructure now? Or it's just too soon. Then the most popular answer, we'll get around to it someday.
Today we want to discuss a way that you don't have to go all in. I want to introduce a method where you can use both paper and electronic delivery at the same time, starting now. That'll cost an arm and a leg, won't it, David?
Not at all. Today we introduce a method that allows you to communicate any document any way the customer wants, while putting up to half of what you're now spending on traditional paper and the post office back into your pocket, and with a far better delivery success rate. Most businesses don't think that's possible.
Our first topic answers that question in Why Choose? A common myth when switching to paperless communication by delivering documents via email is that it means turning paper communication completely off. Most visualize a very straightforward workflow, represented here by a simple flowchart. Many people believe that with the flip of a switch, you turn on paperless communication and just start sending all documents electronically. There's apprehension because most think that sending batch email is just like sending a single email, meaning whether you send 1 or 1,000, you hope it gets delivered and opened. Plus, you hope the customer recognizes that it's important and that it requires action, like payment. When you send batches of hundreds or thousands of emails, you will need to handle a much larger scale of email rejections and bounces. And what about those emails that are delivered but never opened? That must take countless hours of labor to sort and resend those emails, or switch to paper and then mail, right? That's the myth we're busting, so to speak. You can actually put money currently being spent with printing and postage back into your pocket using an automated system built with business rules to keep your delivery methods open. This solution allows you to keep both paper and electronic delivery methods together forever. Your company will have a much higher success rate by methodically evolving to digital communication as adopted by your customers while maintaining the physical mail delivery as an option or as a backup to handle those rejected or unopened emails. So why choose? The truth is, you don't have to. Here's a quick look at the current document delivery trends in familiar industries. As you can see, adoption rate is the greatest for loyalty and rewards programs, while the least for healthcare. Electronic adoption rates in all industries are going to increase every year moving forward. You may not realize this, but the majority of accounting, bookkeeping, and office managers would prefer to receive electronic over paper. To be effective, just as in the graph, you don't just shut paper delivery off, you turn it down as customer adoption increases, and still keep the paper mail option open for customer preference or in case the email isn't delivered or opened within a given time period. How do we ensure delivery for your important documents? Let's go over that now. That brings us to MCC, or multi-channel communication. MCC is a unique solution that seamlessly communicates with, but is independent of, your core operations software that allows companies to continue to manage the sending of physical mail while enabling them to evolve to the electronic delivery option. This solution is built to achieve 3 main goals: faster delivery, lower delivery cost, and increased delivery success. Now, I want to spend most of our time today on the nuts and bolts and explain how it works. I think it's important to understand the workflow of any software solution before implementation. Let's review the common myth flowchart again and build out the multi-channel communication workflow so that you can get a comprehensive understanding of the effectiveness and efficiency. On the main flowchart line, let's insert the multi-channel communication solution. The key to this solution is that MCC uses a DPM, or Delivery Preference Manager. When recipients, your customers, select the preferred delivery method, the DPM saves their preference and automatically sends documents accordingly, either physically by traditional mail or electronically in PDF format. DPM uses a proven opt-in method called e-consent. E-consent manages the entire delivery permission process to drive adoption through automated opt-in campaigns. Using this proven push email delivery method effectively migrates your customers from paper-based communication to electronic delivery, effectively turning paper and mail output down. One-click registration increases adoption with minimal effort from your customers. The recipient can elect which documents they would like to receive electronically, and DPM manages it for you. Once your document has left the DPM, it will be routed based on the delivery preference selected, either electronically processed or with paper and mail. Document Enhance. MCC bundles can also facilitate the creation and/or enhancement of your ideal business documents. You can make simple enhancements to your existing documents, whether it's color changes or logo additions, up to and including embedding active links to your website and any existing online bill pay option. Also, design invoices, reports, or any business documents from scratch, or import a PDF file into the designer to save time. Wizards allow you to import data from multiple software systems to create seamless professional content. You can even store your documents within this comprehensive system. These enhanced documents will improve your company image from the very first letter, as well as promote a green approach to communications, further boosting your image. MCC positively affects every area of your document's delivery. Along the way, you have reports such as, yes, your document has been delivered, and yes, it's been opened, or no, it hasn't been opened or delivered. Electronic delivery efficiency. Monitoring and reporting service is typically bundled with MCC and offers real-time reporting that enables companies to track the status of their electronic customer communications and easily manage exceptions. Robust reporting capabilities provide full audit trail and message tracking that displays customer opt-in status and message type and shows if the email was opened, delivered, or bounced. If an error is displayed, the preset business rules will quickly take action by correcting the email accordingly or switching to physical mail delivery. With the extensive monitoring and reporting provided, you can also provide an electronic paper trail for those who like or need that. We are titling that Delivery Monitoring. After the MCC, the document travels from the company email server to the customer's email server and is delivered and opened. E-Pay options. Optional online payment capabilities can simplify transactions and reduce billing costs. As more recipients switch to electronic mail delivery, many will also pay online. Our software can link your current online bill pay or help you set up with an e-pay service. Until the customer has agreed to the electronic or e-delivery with e-consent, the DPM will send the document to the printer and folder inserter. Of course, traditional mail and USPS follows with mailing the document and finally delivery to your customer's mailbox. With traditional mail, there is typically no confirmation that your customer received the mail piece until there's return communication or if you send an invoice and it's paid. The MCC solution provides you with the automatic document delivery management that gives you the peace of mind that every document gets delivered. If electronic delivery is possible, it will happen. You're also given the ability to add an electronic pay or e-pay option. If electronic doesn't happen according to plan, MCC will still get your document delivered through traditional mail. You now have business rules set to reroute the delivery. Business rules can be timed. For instance, if your email isn't opened within 72 hours, the delivery manager will now either resend your document electronically or through the paper and mail route. There are contingencies set for unforeseen circumstances like soft and hard bounces too. If something like this happens along your document's journey, you need to know. Now you will see the contingencies of the soft bounce and hard bounce boxes here, so let's define those now. If an email is rejected by a subscriber's email server, it's called a bounce. Soft bounce is the term used when an email can't be delivered because of temporary reasons, like an inbox may be full, or the email file may be too large, or there could be firewall changes. Most email servers will attempt delivery again a few times until it determines this may not be a temporary issue and redesignate it as a hard bounce. You will see in a moment that the MCC solution handles this with ease. Hard bounce happens when an email can't be delivered for permanent reasons. The most common reasons for a hard bounce are a bad or fake email address, the domain name does not exist, or the recipient's email server has completely blocked delivery. We added the delivery option service box on top because it's important to note that although typically bundled together, the delivery and monitoring is handled by different services than the DPM, further enhancing security and accuracy. It's time for our lightbulb moment. Today's lightbulb moment is simple, but escapes many. There is a daily value to money. When you increase the speed of invoice delivery, you can increase the speed of payment. Common sense, right? Did you also know that you can increase your company's value? Let's dive deeper. Many of you are aware of a term called DSO, or Days Sales Outstanding, which is a measure of the average number of days that a company takes to collect revenue after a sale's been made. Low DSO days means that it takes a company fewer days to collect its accounts receivables. High DSO days shows that a company is selling its product to customers on credit and taking longer to collect money. This is the reason why many companies offer savings like a 2% discount on Net 10. They are reducing their cost on money or reducing the DSO expense. Obviously, the quicker you get paid, the better. But also know that as your DSO decreases, your company value increases because by quickly turning sales into cash, the company has a chance to put the cash to use again, ideally to reinvest and make more sales. Let's run through some real-world examples. Let's use the most common document in the mail today, everyone's least favorite document, or most favorite depending on which end you're on, a bill.
I'm just a bill. Yes, I'm only a bill. And I'm sitting here on Capitol Hill. Well, it's a long
No, David, not that kind of bill. The other kind of bill. The bill or any other document a company may send can be simplified into 6 basic paths with multi-channel communication. The first path is how the common paper path looks on this system. The bill flows from your core software to MCC. DPM will verify delivery preference, and in this instance, the client has elected paper delivery. Documents always get enhanced immediately following, and then onto the printer and folder inserter, which gives confirmation that your document has been printed and ready for delivery by USPS. Then to your customer, and paid back through USPS, eventually. Next is electronic or paperless, following e-consent election from your customer to go fully paperless. The bill travels from your core software to MCC, DPM, and again, always getting enhanced. then to your delivery monitoring service, out to your email server to be sent to your customer's email server. Delivery and open confirmations are both monitored and reported back. Now, payment should follow, either electronically or through USPS if no e-pay option is available. Let's tackle the soft bounce possibility, which is merely a tiny speed bump for this system. After the bill starts out from your core software and then to the MCC DPM and is enhanced and then to the delivery monitoring service and to your email server and then to the customer server. But wait, instead of the confirmation, next you get a notice of the soft bounce. But not to worry, MCC DPM can automatically make minor edits and reattempt delivery back through the MCC to the company server and then to the client server, all monitored until it is confirmed the customer has opened it and payment follows. Now, we should all fear the hard bounce, right? This is how MCC handles a hard bounce. Let's follow the path. The bill travels from your core software to the MCC DPM and enhanced, then to the delivery monitoring service, out to your server, and then the customer's email server, and then the hard bounce. All progress is halted. The bill doesn't go out, you never get paid, and now you're out of business, right? No, not at all. When MCC gets the hard bounce, it simply moves the delivery back through the paper route, from printing your document all the way through to USPS. Your customer's communications now follow that route until the email is again confirmed by e-consent. MCC adjusts to any of these contingencies until your communication is delivered and opened, either electronically or by mail. Some will call this omni-channel communication because it is simultaneous delivery with both paper and electronic, prior to consent. One practice that can be proactive, especially in the early implementation stages, is to use a dual approach. Use the paper delivery as well as electronic delivery until consent is given by your customer before you make the switch to electronic delivery only. In the MCC explanation, we mentioned the rules you can set in place if the email isn't opened within 72 hours or is stagnant. You can set the delivery manager to resend the email or go the paper, physical mail route, or both, as in the dual option. One thing that's always on my mind, and I'm sure yours, is security. What about security, confidentiality, and non-manipulation? How do you ensure trust and compliance with your new document delivery process? Protecting customer data is fundamental. Any customer information sent over the public internet should be encrypted. This is sensible business practice. Customers also want confidentiality and assurance that their email messages come from a legitimate source. Preventing interception of customer information by unauthorized parties should therefore be a key objective in any electronic document delivery project. MCC offers the highest level of trust to both you and your customers through effective sender authentication and recipient identification methods. MCC also ensures the ultimate in document security by delivering and presenting your documents via securely encrypted email attachments. Remember, it's not just about reducing cost and improving speed of delivery, it's also about doing all of this securely and effectively. Since we mentioned reduced cost, let's show you now how that can stack up. Here are reporting and the savings examples. Remember, the average cost is 75 cents when your document is delivered via paper and USPS, and 35 cents when delivered electronically. That's an average savings of 40 cents per piece, and can be even more with more volume. Let's do the math. Here we show you that as adoption increases, so do your savings, literally putting half or more of the money you are already spending on postage back into your pocket.
Another thing worth mentioning is postage has gone up considerably and consistently. The cost to send a letter has gone up from 33 cents in 2000 to 49 cents in 2015. That's nearly a 50% increase. And if you're wondering, postcards have gone up 15 cents in the same 15 years for a raise of 75%. Companies are looking for a more cost-effective way to send documents and to ensure a secure delivery. Multi-channel communication is the answer. 2 years ago, this solution didn't even exist for small to mid-sized companies.
That's true, David. And a simple yet powerful solution, multi-channel communication with Delivery Preference Manager, helps companies manage their customers' communication preferences and maximize their ability to easily send critical customer communications either through traditional mail or alternate digital channels, and reroute automatically depending on the outcome of the email. As more and more recipients switch to electronic mail delivery and paying bills online, senders will achieve significant cost savings on paper, printing, postage, and labor. With MCC, companies can utilize a solution that's twice as efficient as traditional physical mail delivery and at half the cost. I want to thank you for joining us today, and hopefully we've explained how simple multi-channel communication can be, as well as the time and money it can save you. You should all now know how to get your documents delivered and opened, as well as getting paid quicker. We have something very special in store for you next webinar. I believe it's one of the best yet, so please watch out for your invite. Now, for any of you that may have questions left, or weren't answered by David during the webinar, let's get to our final Q&A. For that, I'm turning the controls back over to my co-host. Here's David.
Thanks, Andy. That was great information. I hope we're able to take some of the mystery out of migrating to electronic delivery and getting your invoices delivered and paid quicker. We always strive to deliver value in these webinars, so I hope this webinar has been informative and educational, and I've answered all of your questions. If not, I'll hang around a little longer. Just type them in the dialog box and I'll answer as many as possible. Or feel free to send an email to your web manager at glc@omecorp.com and I'll get it answered. And don't forget, we are accepting audition tapes for a new host. This one's getting a little out of hand.
Wait, you're kidding, right? We aren't really, are we?
Once again, be sure to watch for our email invite to upcoming webinars, and feel free to reply with suggestions for future topics. Thanks again for joining us, and good luck with your roadmap to electronic distribution.